That's right. That's right. It's about that time of day again here, folks. Time to get back to work tonight. Wednesday evening, after all. It's July the 1st, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job this evening is to help us find the best entry setups for tomorrow. That's Thursday's trading session. And I got a pretty jam-packed newsletter in store for you guys and gals tonight. The charts are all prepped up in the background, as you can see. Got the S&P, got the oil, of course, and we got that yellow metal, the gold futures, on our radar for tomorrow. And speaking of tomorrow, non-farm payrolls tomorrow, end of the week tomorrow, holiday shortened week. We have a ton to cover in this video. Before we jump in and get our hands dirty on those best setups for tomorrow, though, I just want to make sure to remind you to subscribe to our YouTube channel. I don't want you to miss all the good stuff we publish every evening on this video, so make sure you subscribe. And of course, don't forget, if you have any questions, drop those questions in the comment section below. I'll get them answered as soon as we publish the video later on this evening. And as always, if you tune in every evening to watch this video, if you're anything like me and you use this newsletter to get your mind right and get those charts right for tomorrow, hit that thumbs up button for me. Always appreciate you guys and gals tuning in every evening and supporting this channel. So subscribe if you haven't done so already. Type those questions in the comment section below and thumbs up on the video tonight if you guys tune in every evening. But enough of the introduction. Time is ticking. We got a holiday shortened week. Let's get this video started. I want to first kick this off by looking at the calendar for tomorrow. Courtesy of Econo Day, let's take a look at what the schedule looks like here for tomorrow. Tomorrow, of course, is Thursday. It's the second day of July, and it's pretty much the end of the week as we know it here. We got a holiday session coming on Friday. Saturday, of course, is the holiday. I believe for most markets, I believe from what I'm seeing there appears to be some kind of conflicting reports out there, but it does look like we've got a 12 o'clock Eastern time close. I heard from NinjaTrader earlier this morning. It sounds like on the CME website it says 2 o'clock. It could be 2, it could be 12, but it's pretty much a half session on Friday. So I do believe most markets are going to be open, but they may not be tradable right on Friday morning. So you might as well consider Friday to be a done day already. That means we are left with just tomorrow. And of course, it is Thursday, being tomorrow's trading session. So first of all, we know the big news for tomorrow is going to be that employment number, right? Everyone's watching the jobs report tomorrow at 8:30 Eastern time. Yeah, we got international trade, we got some jobless claims. That's all great, but really the big news tomorrow is going to be that non-farm payroll number, right? What's also known as the jobs report. Now, there's been a lot of speculation as far as what the number will be like tomorrow. I wouldn't worry too much about the specific number. What I'm most worried about is how the market reacts to that number tomorrow morning. So I know the big news tomorrow is at 8:30 Eastern time, and I got to give it some time before and after. What you really want to be aware of is that, first of all, in the overnight session or the pre-market, things do oftentimes get pretty slow and pretty sluggish in the overnight session and the pre-market as everyone's kind of waiting to see what that number will be like at 8:30. So, you know me, I always want to remind you guys to be careful before these non-farm payroll numbers. If the market's not moving very well overnight, you know what people are waiting on. If we do have good personality, though, overnight and the pre-market, feel free to trade it. But if you notice, though, things are sluggish, things are low volume, you know what they're waiting on. They're waiting on that big number tomorrow at 8:30 Eastern time. And then once that number comes out, if the number comes out outside of expectations like it did a month ago, then we oftentimes see a pretty whippy, a pretty volatile reaction to it. I like to give it 5-10 minutes after that number comes out, update my charts because usually there's some pretty big volatility swings, and then of course get after it right for the rest of the morning. Now tomorrow we should see a pretty decent morning session, I would imagine, with Friday, of course, being kind of, again, markets are, I believe, technically open on Friday, but with Friday being kind of a trader's holiday, I would imagine there to be quite a bit of opportunity in the wake of this employment number tomorrow. Now, we always trade in our trade room from 8 o'clock to 11:30 Eastern time. So, I would definitely be at your desk tomorrow. That, the employment number, of course, at 8:30, by about 8:40, 8:45, things should be slowing down and things should be getting back under control again. Kind of the dust will settle after that 8:45 block. So, we go into 9 o'clock. From 9 o'clock to 11 tomorrow will definitely probably be where the best setups are going to be. If you could only be at your desk tomorrow for an hour, well, we continue to see our very best entries coming in that 10 o'clock to 11 o'clock block. So I'm definitely thinking 9 o'clock to 11 will probably be where the best setups are going to be for tomorrow. But again, if you could only be there for an hour tomorrow, that 10 o'clock to 11 o'clock has been when we've seen kind of everything line up and we've seen some of our best setups in our trade room. We also have that factory orders number tomorrow at 10 o'clock, which definitely won't hurt to add more volatility into the mix as well. So we got the non-farm payroll number for tomorrow, right? Again, be careful here overnight, right? Be careful in the pre-market. Give it some time after the number comes out at 8:30. And then again, if you can only be there tomorrow for an hour tomorrow, that 10 o'clock to 11 o'clock hour has been some of the best of trading here so far this week. But rest assured, though, don't forget, we're going to be in our trade room tomorrow and every morning at 8 o'clock Eastern time to make sure we finish up this week with a bang. I'll put all of the trade room information for you guys if you want to come out and trade it with us tomorrow at the opening bell. Again, we open up at 8 o'clock. We'll get the charts all updated, and we'll, of course, wait for that number to come out. I'll put everything you need, though, to join the trade room tomorrow. I'll put it right below this video tonight on our blog or down the description of this YouTube video. So make sure you grab that before we get started. All right, so now we get the charts or the calendar ready for tomorrow. You know where to get the information to join me in the trade room tomorrow morning. Let's get some charts going here tonight on the video. Got some S&P. We got some crude oil. And, of course, we've got the gold here. What do we got going on the charts here tonight? Over on the E-mini S&P. Let's grab the E-mini here first, and let's see what we know here on the E-mini S&P. Now, as far as the E-mini goes, there are really three main components. One is we know this market is a bull market. In a bull market, I always want to buy at levels of support. I like these areas right here at 92, right at 89, and I really like this trend line coming down just below. We'll talk a lot more about those levels of support here in just a moment. We also know there's a spike in channel on here, and you'll notice how the market jumps up and it keeps kind of punching up to these new highs. If I draw a trend line that is off the high of those highs, I can bring it down to that low, and that's going to give me what is kind of like a hidden spike in channel. I'm sure for most people, they would have that spike in channel drawn like that. That'd be the technical way to draw that spike in channel. I like to look for these kind of hidden or negative channels, as we call them, and that would be a very good fit for that channel. Now, this second kind of piece of the puzzle here, what does a spike in channel tell us? Spike in channels tell us really two main things. One is I can buy off the low of that channel. Okay, so keep that in mind. The second one is I can buy down in the base of that channel. Right? Basically where that channel runs into the spike, right? So I can buy it on a much deeper pullback, right, on a spike in channel. Those are the two best places to buy a spike in channel. And just so you know, the best place to buy is that deeper pullback because it gives you a much better risk-reward ratio. So we know we get a bull market, and we know we have a spike in channel pattern. The third and final piece of this puzzle, you can probably see it right there, is that trading range. Now, what does a range tell me to do? Well, this is a bullish range, and whenever we have a bullish range, we know we want to find levels of support below the range and buy those levels of support, right? So in a bull market into a range, I want to buy below the range at levels of support, right? That's the kind of the rule of thumb when it comes to a bullish market into a trading range. So you'll notice if I put all three of those kind of pieces together, we know we're bullish. I want to buy at support. We know we have a spike in channel, right? I want to buy that low. And of course, right, we got that trading range. I want to buy at support underneath that range. You can see it all comes together here in a very easy to see area where I know exactly where, if I had it my way tomorrow, I'd love to get down into this buy zone down here. And then of course, at this point now, I'm hoping that sellers will be able to I'm hoping that sellers will come in and try to get short on that next pullback. That's what I'm hoping for. If I had it my way tomorrow, I'd get that nice deep pullback right down into support. Get those bears to come in and try to get short off the moving average. Once I see those bears getting short, now I know exactly where their stops are. Now I know exactly where their pain points are. And now I can look to buy into those stop losses. I can buy into stop losses. I can also buy on the pullback as we go back in. So definitely, if I had it my way tomorrow, my kind of dream come true scenario would be a seller failure into a bullish pullback pattern. Now, I'll be honest, this is a very common sequence that we see in our trade room. Failures into pullback combinations. In fact, I talk a lot about this kind of combination setup inside of my free trading class. So if you haven't done so already, I would definitely encourage you to grab the free trading course that you see popped up there in the upper right hand corner. And also too, I'll put all the information for you guys in the description of this YouTube video. But grab that free course that popped up in the upper right hand corner. We talk a lot about these combinations, right? These seller failures into bullish pullbacks, right? So that would be kind of my kind of home run scenario here for tomorrow. Now, at the same time, though, there may be some variations to that. For example, as I mentioned earlier, we do have this spike in channel, and it wouldn't surprise me if we see a lot of buyers, right, trying to get long off the low of that channel. The problem, though, is I'm running right into that range. You know what I mean? It's not a very risk small to earn large opportunity there. So if I want to be a buyer off of that low, what I really need to do is I need to find a way to avoid basically buying too high, right? I don't want to buy too high. I want to buy way down here, right? I will buy it if I get the right setup, but I want to buy too high. So what's the best way to avoid buying high? It's traps. And trap patterns are really easy. If I pull back to that low, I'm going to wait for bears to try once. I'm going to wait for bears to try twice, and I'm looking for a trap. So if all I get is a relatively shallow pullback, I'm going to wait for bears try once, bears try twice, and look for a trap. Now, honestly, this could go a little bit higher too, right? It may go once, twice, 3 times, right? And then that trap. So that will be okay too, right? That will be fine too. I just want to make sure if I don't get that ideal pullback, like I mentioned before, that failure into pullback combination, if all we get is that shallow pullback, I want to buy too high here. So looking for traps, right? And of course, traps are pretty easy. You want to see a higher high and then mark up that prior swing and buy just below it. Now, traps, I cover these in a lot more detail in that free trading course that I mentioned. So make sure you grab that free course linked up in the upper right-hand corner to learn more about that as well. Now, there's also a chance too, like I mentioned earlier, I've got this trend line here. And in all honesty, this trend line could have really been drawn a little bit steeper, even like that. So there could be even more of a downside move going on here, especially since we're right around that big round number. It wouldn't surprise me if we kind of get like a pendulum swing. You know what I mean? The amount of the move that is above the big round number is the amount of the move that is below the big round number. You know what I mean? So it wouldn't surprise me if we saw a little bit deeper pullback than what I'd really like. But that's okay. If we do see it really pull back here, right? If it kind of really extends that move lower, we still have a bull market at this point. We haven't reversed to a bear market. I'll talk about that more in a moment. But at this point now momentum is a bigger concern here for us, right? Now momentum's a pretty big concern. And because of that now, I still want to be a buyer, but now I've got to be careful because the sellers are probably not going to give up without a fight. So what I'll do is I'm going to wait for the pullback. I'm going to wait for the bears to try once. I'm going to wait and to try twice. What I like to do is I like to draw a trend line off of those lows and buy off of that trend line. 1 try, 2 try, and buy off that trend line. Another setup I like to use is as we go low, again, very deep pullback. Another one here would be a very shallow 1 try. We go up, two try back down, double bottom, or a trap low off of this. So these are what I call nested failure patterns, and they're great whenever I have a really deep pullback and I want to have to really kind of protect myself against the sellers being too strong, right, and going lower. So those are three scenarios here as this market pulls back here for me of kind of what I'm looking for to buy this next pullback. Now, if the market goes sideways here, I really don't want to do anything inside this range. What if we go higher, right? What if we push higher here? What if the market takes off to the upside? Well, we got to think about where we're trying to go. You'll notice I've marked up this big leg higher. That's my lowest point. So that'll be my measured move. So if the buyers can take control of this again, or I should say if the buyers can keep this going, they've got that measured move waiting for them up overhead. The problem is you can definitely see there's a little bit of a top here, right? So trying to be a buyer, probably not going to be a very easy thing to get my teeth into unless I can get one of these two breakout patterns. Here are my two favorite breakout patterns. The first one is called a 1, 2, 3 breakout. It starts off with a strong move to a new higher high. Then as the moving average comes over, the buyers come in and they jump off the moving average. This is really important. We have to get this 1, 2, 3 momentum move. That's going to confirm this breakout. You'll notice they haven't been able to do that yet, right? They haven't been able to really get that 1, 2, 3 move yet. So if the buyers can prove to me that they're interested in going up to that measured move, right? Possibly up to that 31.45 level above it, now I can start looking long on the next pullback. I call these 1, 2, 3 breakouts into a hidden channel pullback. Now, we saw a great example of this on the gold today. I'll talk about that here in a moment. But most important thing, though, is once I get that 1, 2, 3, I always like to get aggressive on that first test of that channel. And we'll see an example of that on the gold here in just a moment. But the most important thing, though, is get the 1, 2, 3 breakout, then that first channel test off the low of that channel. Another one of my favorite breakout patterns, if this market really races higher, then I look for a shallow pullback, a higher high. Anytime I see a strong move, a shallow pullback, and a higher high in price, I know there are traps waiting right below that low, right? That is another good buy there. And I'll be honest, I always like to try to combine that entry with the low of a new hidden channel. So just going to keep that in mind as we try to go higher here. Again, with that, what I call a 2-try trap pattern. So 1, 2, 3 breakout, mark the high, mark the low, get aggressive on that first test, or strong move up, shallow pullback to the moving average, right? New higher high, mark that low, and that trap off of that low. And again, trying to combine the low of that hidden channel. We call those 2-try trap patterns. And again, I talk a lot about those patterns in that free course that I mentioned, linked up in the upper right-hand corner. And again, you can find all the membership info, the trade room info, the free course info in the description of this video. Now, how could I sell this market? What's the best way to get short? Well, we're not really at a turning point right now, so I really couldn't try to get a reversal right now, right? If I was at like a major turning point up here, you know what I mean? Then I would say, okay, let's look for the reversal. But we're really not, right? We're really not at any major turning point right now. So it's really difficult to try to pick a top on a bull market. What I would do though is look for that same 1, 2, 3 pattern back for the bears now. So to trade short on this, I first need to turn momentum to be bearish, which means lower low, strong move down. Pull back to the moving average, jump off the EMA. What do we call those? 1, 2, 3 reversals. Now remember, I can't sell that first pullback. It's not that easy, right? It's not that easy. It's pretty easy, but it's not that easy. A strong move down is not a given. It's not a guarantee for a reversal. We see a lot of strong moves down in bull markets, and they end up snapping right back higher. So I'm not trying to trade to try to sell that first pullback. I'm going to wait for that 1, 2, 3 reversal, mark up those lows, mark up that high, and again, I want that first test of the high of that channel. That's the trick, right? That's the trick. I want to wait for the trend to change and then get aggressive off the top of that hidden channel. Target, of course, is back down to retest those lows, right? So buyers, they want to get that measured move. They really want to get that 31.45 top up there, right? Big tops up there at 31.45. Sellers, of course, they want to bury this thing down to that 30.62. Just be careful. Just be careful again ahead of the news tomorrow. We may see it go sideways here into that non-farm payrolls on Thursday morning. S&P looks really good. Don't forget, if you have any questions about this stuff, drop those questions in the comment section below. How about some oil tonight? Let's get this oil going here. What do we know about the oil right now? Well, you know, oil is pretty similar to the S&P in the sense that we've got three main components, and they're pretty much identical to the S&P, but they are a little bit different. The way it looks, the chart obviously looks very, very ugly right now. What do we know first? We know the market is bullish. And in a bull market, I want to be a buyer, right? I want to buy at a support level. I really like these swings down here. One thing that stands out like a sore thumb on this is we haven't seen any traps. There's been no traps, right? We haven't seen anything go below these prior swing lows. So you can almost guarantee there's a lot of buyers waiting down here who would love to sink their teeth into a lower entry price right now to hopefully go back up to get that $40 a barrel. But I'm getting ahead of myself right now. We know first, right? The first component, we know we are bullish. We want to buy at support levels. What else do we know right now? We also know if we draw a trend line across these highs, you can see there's a little bit of a head fake up there, right? A little bit of a head fake up there, a little V-top up there. You can pretty much kind of ignore that right now. It looks like that was what we call a market mistake in our trade room. But you'll notice if I draw a trend line off those highs, bring it down to that low, what is that? That is a channel, right? It is a channel. Price goes back and forth inside that channel. And so what do we call this? We call this a spiking channel, right? To spike up into a channel. This is very similar to what we talked about on the S&P. What do spiking channels tell us to do? They tell us that we can buy the low of the channel. Okay. They also, more importantly, though, they tell us we want to get underneath it, right? We really want to get down in the base of that channel, right? That's where the good stuff is. Get that nice deep pullback. That's where the real money is made in a spiking channel. And again, because we haven't seen any real deep pullbacks yet, no traps on this yet, you have to assume there's a lot of buyers who would love to get that deep trap low. Now, third piece of the puzzle, and that one's pretty obvious, I think, right? This is a chart only a mother could love, right? It's definitely not the prettiest thing in the world. We've got this consolidation right now, and of course, this is what? It's a range, right? It's a triangle. It's a range, right? It's a consolidated area. Now, this would make sense. We heard from, I believe it was Saudi Arabia today. It sounds like we got some bickering going on between Saudis and Libya, I believe it was today. So we'll see if that bleeds into tomorrow. But it looks like they're getting a little bit feisty, a little bit testy with each other about production cuts right now. Who could have ever saw that coming? But we know there's a range, right? And we know this range. What does a range tell me to do? In a bull market, what does the range tell us? We talked about this, right? It tells me to buy at support levels, right? Below the range, right? So bull market into a range, what do? We want to be a buyer, but more importantly, we want to buy underneath the range at a level of support. That's the key, right? When I say range, you think buy low, sell high, but go one step further. Buy low at support below the range, right? We don't just buy low below the range. We buy low at support below the range. It's a very, very important part of the step. I don't just buy below the range. I buy at support levels below the range. Okay, so knowing all of this, right? Knowing that we're bullish, knowing we have a spiking channel, and knowing that we have this trading range, I think you can probably take it from here, right? You know exactly where I want to be a buyer. I want to be a buyer way down here, right? Now, what I'd love to get, if I had it my way, if they called me up and said, hey, what do you want tomorrow, bro, right? What do you want tomorrow after the news comes out? I would say, give me a nice deep pullback, right? Let these bears come down, get them to take the bait by selling off the moving average. Once I see them get short, now I know exactly where their pain points are. Now I know where their stops are, and now I can buy into stops. I can buy that pullback, and I can run it right back up to retest those highs. Failure into pullback combination, right? You can see a little example back here, right? Right there, failure, right? Failure into pullback combination. We haven't seen a lot of them here in the last few days. It's been pretty choppy as we go sideways. But that's that would be my kind of home run scenario here for tomorrow. Now we got some pretty big news coming out here, right? Tomorrow morning. What if the market really takes a dump, right? What if it really takes a nosedive? What if we clean through this area? Okay, what if it just snaps lower here? Then what do we do? Can I still buy that? I can still buy it, but remember, I'm looking for that nested variation, right? Now, instead of getting aggressive and buying the stops, I look to try once. I want to try twice. Again, I like to grab a trend line off of those lows and buy off a trend line, right? One try, two try, buy back up. Or another one of my favorites is if I see a strong move down, I look for a shallow first try, run up, trap low or double bottom. That will also work as well, right? 1 and 2. And again, remember the prerequisite for this is it's a very strong pullback, right? Very strong pullback. If it's a real strong pullback, that momentum becomes too strong, and I want to let those bears kind of get out of their system, right? Let them try once, let them try twice, and I can grab that trap, right, or that double bottom. So at least I'm buying at a support level without buying too high there. Those are two nice setups I'm watching if we get that nice deep pullback. Now, what if we don't get much of a pullback here? What if all we get is that shallow pullback? Well, if we get the shallow pullback, I've got to be really concerned I'm buying too high. What's the best way to avoid buying high? Traps. One try for the bears, two try. And the only reason why I need two tries on this is because I need to get some sort of trap, right? That's the only reason why I need these bears at least twice. Because I need some level that I can sink my teeth into to get that trap low, right? That's why I need to have, and again, I'm looking for traps in situations where I'm worried about buying too high, right? I'm worried about this trend line coming down. I'm worried there's a top up here, right? I'm worried about buying too high. And so the best way to do that, best way to avoid buying high or selling low for that matter, would be a trap. In this case, a bear trap. And don't forget, traps are really powerful. Failures are really powerful. And we cover all those patterns inside the free trading course. You'll learn my favorite, my favorite entry patterns, my 3-step strategy. You'll see hundreds of examples of how we apply that strategy to our favorite futures markets. I think you'll love that free trading course. So jumping into going higher here. What if we push higher here? Well, first of all, if the market does push higher, we've really got to get this thing going because we got a bunch of tops up here. I can't be buying breakouts. We had that kind of head fake, right? That kind of fat finger as the market went higher there. That is going to be a big concern. So can we break through this, right? What if the market does push through? What would my plan be? Well, first of all, we got to know where they're trying to go. Where do these buyers want to go? Boy, there is a juicy target up there around that 41, right? 41.30, 41.63 area. So how would I try to break out of this range? There are two breakout patterns I like to use. One of them is called that 1, 2, 3 breakout. Right? So strong move up, pull back to the moving average, jump off the EMA. I'm going to mark up that high. I'm going to mark up that low. And I really like to get that first test of that channel, right? Mark off the highs first. Okay, because you get those first, then mark off the low, right? Then wait for that pullback and hit it when it pulls back to that low. Very, very reliable setup. And again, I wish I could trust that first pullback, but you can't, right? And believe me, I want to, but just because we get a strong move up doesn't guarantee they're going to hold that pullback. Not in a range environment. This is no longer a trending market. Yes, it is bullish in its trend, but it's going sideways. It's a range. 1, 2, 3, that qualifies a breakout. Mark the high, find the low, buy off the low. Now, sometimes the market really gets going, right? And it really starts to punch. If I see it really start to punch, I then look for that shallow pullback, that higher high. Once I see that strong move up, that shallow pullback, that higher high in price, now I know exactly where those buyers are waiting. Buyers are waiting right below that low, and as soon as I can get that little trap low, that is another very reliable opportunity. Don't forget, I always like to try to find those hidden channels because that really increases my odds of success, and you know where they're trying to go, right? They're trying to get up around that 41.30 to 41.60 area for that big target overhead. Now, how do we sell this thing short? Could I sell this thing short? We definitely can, right? There are some options here to get short on this. The first one would definitely be the reversal off the high. I do think with that kind of head fake at the high, there's kind of a false top or a false ceiling on this market. So I definitely would not be opposed to one of my favorite reversal patterns, a crown reversal. This will go up into those highs. Now, pay close attention to this because the rules on this are very, very important. I'm going to wait for a pullback where the buyers try to retest the high. They're going to fail. We go to a lower low in price. Now, watch that interim swing. And that's where the magic happens for these crown reversals. I call these crown reversals. They're basically just buyers trying, right? Buyers basically trying to buy the first one. They fail to retest the high. They come in, they try to hit it again. And right when it gets a little bit above that first try high, we look for those big, juicy sell signal candles, right? And we sell it back down into the range. Those are called crown reversal patterns off the high. Now, obviously, if you're looking for reversal patterns, I should also warn you on this. Rookies, be very careful with reversals. Most important thing, if you're on one contract on a small account, I would not want to be, if I was on one contract and I was a relatively new trader, I really shouldn't be diluting my winning percentages by going after reversals. If I'm on one contract as a new trader or relatively new trader, a trader who's still trying to perfect this skill, I would stay away from the reversals. Demo it, right? Use a simulator, trade it like that, but save the good stuff. Save these 1, 2, 3 reversals. These are much more reliable sells on the way down, right? This is what I'd be looking for if I was back on one contract, just getting started again. Just because it's very tempting. When you're a rookie trader, it's easy to take too many reversals. It really is, because what happens is our mind plays tricks on us. It does, right? We have all these what are called heuristics, right, in our brain, where because we've seen this thing before, right, we think it'll happen again, and they're just not as reliable. So be aware, right? Your brain will play tricks on you and make you think that reversals are easy to predict, that calling tops and bottoms are easy, because again, your brain will go, well, I already know they happen, and so they'll tend to gravitate towards those counter trend trades. In my trade room, I always tell my clients, if you're a new trader, the vast majority of your trades, right, 98% of your trades in the first 6 months or first year of your career really should be going with the momentum of the market. Once you prove that you can handle the easy stuff, right, or none of this is that easy, right? There's a lot of moving pieces. The easier stuff, once you prove that you can actually handle the easier setups and the more reliable setups, as long as you prove that, then you can start to add in those counter trend, what are lower probability trades. The problem is when you overdo the number of counter trend trades, when you're a rookie, you're not putting yourself in a position to really let yourself be successful. So as a rookie, one contract trader, if I did it all over again, I would stay away from the counter trend stuff. Just stick right with, and again, a sell setup you can trust. 1, 2, 3 reversal, wait for that momentum, right, and sell off of that high, right? Don't let your brain play those tricks on you and make you think that everything is going to be a place to get short in a bull market. Now, we know what the sell side looks like. We know what the buy side looks like, right? The buyers want to get up, right, to that 40, what would we say here, right? 40, right? 41.50 area. Sellers, they want to get all the way down to fill that weekend gap. We got a pretty good plan here so far, right? Don't forget, any questions, drop those questions below. I hope by now you've hit that thumbs up button for me here on the video. And if you haven't done so yet, make sure you subscribe to this YouTube channel, please, because we got more of this good stuff coming here every night on this newsletter. How about some gold? How about some gold here? What do we know about gold right now? Well, a couple things really. One, we know we're bearish. That is for sure. We definitely have a long-term bull market right now. There's no doubt about that. But we are certainly bearish here for at least for right now. What else do we know? Well, first of all, what does a bear market tell me? Bear market tells me I want to be a seller. I want to sell at resistance. Now, what else do we know? We also know we are 1, 2, and pretty much 3 legs down. Now, these are 3 pretty healthy looking legs. These legs don't look like they've missed any meals recently. They're pretty big, pretty big, large legs here, which usually means the following day is going to be a range. Now, this would make sense because tomorrow, of course, is non-farm, not Friday, but non-farm Thursday. So we do expect on that non-farm payroll, that pre-market, we do expect gold to be some nasty price action. Now, every once in a while, gold surprises me and we get a really busy, good trading overnight session before the non-farm payroll report. Remember, tomorrow morning, 8:30, we have pretty much the biggest news of the month, right? Hitting the tape tomorrow. Gold, I always expect gold to be very, very difficult on that non-farm payroll number. Again, usually it's Friday, but tomorrow is on a Thursday because of the holiday. So if there's one market tomorrow that is probably going to be the most difficult, it's probably going to be this one. But again, last couple months, we have been surprised a couple times by getting some really good price action on the gold leading up to non-farm payroll. So be aware of that. Just, be careful tomorrow. If things are grindy, right? Red candle, green candle, red candle, green candle, right? If we're seeing a lot of that stuff, right? If we're seeing a lot of that stuff tomorrow, right? If we're seeing a lot of that stuff ahead of the news tomorrow, to be very careful because you know what's happening, right? Gold, of course, highly affected by these big news events. So we know we have 1, 2, 3 legs. I think the hardest part right now is we really don't know where that range is, but anticipate it. This is definitely something we expect to see tomorrow. What else do we know right now? We also know, and this is probably the most important clue on this chart right now, we also know, let me get rid of some of these lines here so I can keep things a little bit organized. We also know it does look like this is where the range is going to be. It's going to be somewhere probably in and around there. One very big clue is an overshoot of that trading range. Now, why would that be important? It's important because if we go back into a range here and we try to sell above the top of that range, what's going to happen is there's going to be a trend line coming down. And that trend line might as well be bear spray. It's bear repellent, right? That trend line makes it very difficult for bears to get short because they can't get around that rising support. Now, again, a lot of this is kind of me anticipating because of just doing this for so long, right? Almost 15 years every day at this desk. So 1, 2, 3 legs down, I anticipate a range. That overshoot right there is a big, big clue. It's not a guaranteed reversal, but it makes me look more long than in looking short. Because if we go sideways here again, if we go sideways on this, what will we look for? This would be a range, right? Now, what do we do? What do we do in a bear market with a range? We look to sell above that range at a level of resistance using a failure pattern. But here's the problem. Now with that overshoot down there, now that becomes a rising support trend line. The sellers can't do much with it. And this is kind of where I'm anticipating, I'll be honest, this overshoot, the biggest thing it tells me is the sellers really don't have a lot to work with tomorrow. This really looks a whole lot better right now to be a buyer than it does to be a seller. As crazy as that sounds, right? I mean, you'll normally never hear me say that. Not in a bear market, that's for sure, right? Usually in a bear market, I'm preaching about stick with the trend, right? It's usually the better way to go. But with this overshoot, though, I'm starting to think we might begin to start seeing some buyers start to pick these bottoms and try to get that short covering rally right back back up, right, for that big round number. So knowing that, right, let's try to put this stuff all together here. First of all, I want to talk about my favorite setup for tomorrow. If I had it my way tomorrow, there's two patterns I would look for. One would be a 1, 2, 3 reversal, right? Get that jump off the moving average and find that hidden channel, and buy that low. 1, 2, 3, 1, 2, 3. Buy the low of that hidden channel. Target, of course, is up around that round number. Now, with that reversal, I would also be looking for that 2-try trap, right? So strong move up, shallow pullback. Gold tends to be a little more volatile, so the 2-try trap might be more feasible, right? More realistic for the gold. Same thing, right? Trying to find that channel, buy off that channel low. But these are the same patterns, right? Strong move up, shallow pullback, higher high, trap low from there. Those are really kind of the same basic idea, right? After we get a reversal. Also, too, we may see this thing try to make a run up. It may pull back here. This is where I'd like to take a look at a crown reversal pattern. As we go lower here, I'd like to look for the bears trying once, the bears trying twice, and look for that crown reversal, right? Because that would be, again, I do realize this is counter trend at this point. So again, if I was brand new to this stuff on one contract, I would not dilute my track record, right? My winning ratio, really, right? I wouldn't drag that winning ratio down, because when you're a new trader, it's all about keeping your ratios high. When you take more winning trades, you build your confidence. Confidence is like grease on the wheel, right? When I was a new trader, I made a lot of mistakes that way. I was always getting too aggressive, taking counter trend trades, and they're just, no matter how good your setups are, counter trend trades like these are just not going to be as reliable as a with trend trade. So if I went back to do it over again and started my career over again, I would really stay focused, at least for this first 6-8 months on one contract, only taking trades with the trend, because that's going to keep that winning ratio 75-80%, at least with the setups that I know best. And then once you've got confidence, once you get the wind at your back, once you know your skill sets, then you can start to add more of the advanced, like crown reversals, right, into your toolbox. Just kind of my point of view, right? So that will be another one I'm watching for here tomorrow. So really, again, I just don't see a lot of great options here right now for these sellers. Now, what we also may see here too is we also may see this market, there's a weekend gap right there. We may also go back up and go sideways into that range. So if the market kind of runs up and goes sideways here, what do we do in a bull market now into a range? We buy at support levels below the range. So I'll mark up that swing and I'll look for that 1, 2 failure pattern. It's basically just a seller failure off a level of support below the trading range. Think about it this way. It's a breakout pullback that fails. Okay, because again, at that point, if we go sideways on top of that weekend gap, that'll be a bull momentum into a trading range. What do we do in that situation? We buy at support levels, right, below the low of that range. That should be a pretty easy setup as well. The other thing here, how else could I sell this market? Well, I'd have to wait and see where this range comes from, right? If I can get this range to form and really start to nail down that range now I can anticipate that trend line. I can go up, get short above it by using a trap, right? Because I'm worried that I'm going to see a trend line here. And so I'm worried I'm going to sell too low. How do you avoid selling low? Traps. So 1 try for the bulls, 2 try for the bulls, trap high, and go from there. Okay, so if we do see that, again, if we do start to kind of flesh out this range here, and I can draw that trend line, again, that's why I say, I think that overshoot down there is just, and again, it may not be an obvious overshoot yet, but you see that wick right there, these wicks right there, there's a bottom right here, right? There's a bottom right there. I'm not sure where it is yet. Might be right there, might be right there. I don't know exactly where it is yet, but if that's the case, right, if that's the range, and this thing keeps going like this, right? There's just no way I can sell above that high. I can't sell that. That's crazy. Well, I mean, it's not crazy, but the problem is you got a lot of momentum, right? A lot of momentum, and you've got trend lines coming up. So the only way I can really justify doing that if I have that trend line coming up is I've got to go up. I've got to see buyers once. I got to see them twice. And again, it's not so much the 2 tries. It's just I got to find a trap, right? I have to be trying to find some way to protect myself against that rising support trend line. So this is why I keep going back to the idea here that the sellers are they put themselves in a really tough position because of the just such aggressive move. You know, whatever spooked this market at 6:30 this morning is, I'm not sure what happened to it, right? But the market obviously got spooked, and this thing just took off, right, like a rocket ship. And by the way, you know, we talked about that 1, 2, 3 reversal last night. Last night we talked about, you know, not shorting it, right? Not trying to call that top. Well, obviously, right? You know, as my to quote the famous Mike Tyson, right? Everyone's got a plan to get punched in the mouth, right? The thing gets punched in the mouth right there, right? There's old punch in the kisser right there. Strong move down. Now we obviously can't sell that. You really can't sell that thing because it's not a bear market yet. Right? That's why, of course, I mentioned if we get a big move, right? Wait for the 1, wait for the 2, and then go up, right? So that was the nested failure in action if you watched last night's newsletter. But once they got that thing running, right? It took a while, but again, this is a 1, 2, 3 reversal. Mark up that low, mark up that high, and look, they weren't messing around, right? Right when it comes back to the top of that channel, bam. Right? They whacked it. That's what I mean when I say, and again, you know, obviously I would have loved to have found a way in earlier on this, but the pattern is very, very simple. 1, 2, 3 reversal, mark up that low, mark up that high. First test, right, is always the sweetest. And then it just looks like they just kept it going too far. It looks like this move was a little bit too far here. They're a little bit above their pay grade, right, on that move lower. I would love to see this gold just rip right back up to the 1800. Do we get this 1, 2, 3 into that hidden channel? Do we get that run up into a 2-try trap? Do we have it roll over, right, into a crown reversal off of that low? You know where I'll be tomorrow morning. Well, the front row seat tomorrow, 8 o'clock Eastern time. I hope you'll come out and join me tomorrow morning to finish up what has been a great week in our trade room. Once again, I'll put all of the membership information for you guys so you can get registered for tomorrow's last session of the week. Friday is a holiday. I will not be back tomorrow, by the way, on our nightly newsletter tomorrow night. We'll be off, of course, on Friday, so no trading on Friday. Enjoy the long weekend, but make sure you come back and see me on tomorrow morning at the opening bell to trade the session tomorrow, or come back and see us again right on Monday for the next edition of our nightly newsletter. Don't forget, don't be afraid to call me in the office if you have any questions. I've got live support if the telephone isn't a good fit for you. And whatever you do, careful overnight ahead of that non-farm payrolls tomorrow. And please, careful this weekend, right? Especially around all the fireworks. Make sure you bring back all those fingers and toes on Monday. Have a great weekend. Be safe out there. Have a fantastic holiday. Look forward to seeing you guys right tomorrow morning. And if not, we'll see you guys on Monday. But we're back next Monday after the holiday. As always, my name is Joseph. Be well out there. Be nice to each other. And be here next time, will ya? Adios, amigos. Bye-bye for now.